Welcome back to another video of mine. I'm super pumped for you guys to watch this one. I do think this is going to help a lot of you become better traders. I really do. The title of the video is this is 5 steps to becoming a top 5% trader. I am a 6-figure day trader in the Forex market, but the lessons that I'm teaching here can apply to any market that you're trading, whether it be indices, options, Forex, it doesn't really matter, stocks, etc. So I'm gonna jump right into the top one. This one is by far one of the absolute most important parts to my day, if I'm being completely honest, when I do jump into the charts. But the top one is top-down analysis. So the first thing you need to do when you get on in the morning or the afternoon or nighttime, whatever it is when you're trading, you have to do a top-down analysis. So you may be asking yourself, what is a top-down analysis? A top-down analysis is when you get on and you go top-down from the higher time frames all the way down to the lower time frames. Your entry time frame, it doesn't really matter. If you enter on the 1 hour, then you would maybe check the weekly down from the daily all the way 4 hour, 1 hour, etc. For myself, I like to enter on the lower time frame, so I start on the top and bring my way all down to the bottom. It's like you're painting a picture. Each step you're about to hear about is like building a puzzle, right? And each piece allows you to have a clear picture of what the puzzle is, right? So top-down analysis, by starting on the higher time frames and bringing your way down, you're able to see where the market is on the higher time frame, which is essentially the direction we want to be going in, right? Because all the people who are on the lower time frames, trapped on the lower time frames, they're going to get absolutely slaughtered without a top-down analysis. So I'll be talking about this in a later video, but top-down analysis is number one, and it is honestly one of the most important things. Step number 2 is, after you have done your top-down analysis, you now want to determine and analyze what has happened in the session before yours. So for example, if you trade London, you want to take a look at what Asia did. If you're trading New York, you want to take a look at what Asia did and what London did. And with this, you're able to, again, add the pieces of the puzzle to make it more clear and to help support your bias or create a bias if you don't have one yet. This is very important. Like I said, these are literally the steps that have taken me from not funded trader to multiple 6 figures. I mean that, and I'm super excited to share these with you, because without these steps, I wouldn't be where I am today. So first one, top-down analysis, and the second one is you want to determine what just happened. So by analyzing what previously happened in the market the session before yours, it's going to help dictate or help you create your daily bias for your session. I truly believe sessions are all different. Asia has its own mindset, London has its own mindset, and New York does as well. There is a daily cycle play that is very nice that I've talked about before. Usually with London session, it'll sweep the high of Asia and then go for the low of Asia, and then New York will retrace to continue that move, or vice versa. I do cover that in my mentorship if that is something you're very interested in, but if not, use what I've talked about in my free breakdown videos and kind of reverse engineer that if that is something you are not really interested in. So after you've looked at what happened in London session or Asia session or New York session, whatever your session is, you're going to have a better idea of what we could potentially see in this upcoming session, in your upcoming session. So for example, if London ran liquidity, I'm going to be looking in New York for a retracement to either continue London's move, or New York is going to have a full-blown reversal, right? So each session kind of backpacks off what the session prior did, unless it's Asia. Asia, a lot of the time, will have a rangy environment. London will take the higher low and then move in the opposite direction. And then New York will usually backpack of what just happened in London session. So once you learn these characteristics and you've done your top-down analysis, you've now asked yourself, okay, what happened in the session before here? Then the picture is becoming more and more clear. The third step, you're going to want to determine or ask yourself, are we going to have a strong dollar day, or are we going to have a weak dollar day? So what I mean by that is DXY going to be bullish? If DXY is going to be bullish, then you are going to be shorting foreign currency. So XXX USD will be shorts. If it's going to be a bearish dollar, that helps, because then you're going to be looking for longs on currencies, right? You're going to be looking for longs on XXX USD. And this helps huge. For myself, I found I was really neglecting this for a little bit. I used to focus on DXY a lot, and then I stopped, and then I found myself being blind, right? Not knowing where the dollar was, and the dollar is huge, whether it be for stocks or if it's just for the financial markets. DXY is a massive indicator of where price is going to go across all currencies. You probably noticed for all US news events, it affects all pairs, it affects the indices. It's the driver. So it helps a lot, because a lot of the time when I get on in the morning and I look and dollar looks very, very bullish, it just helps me with my bias that I'm going to be looking for shorts on EU, GU, AU, whatever it be, and it allows me to look for longs on my USD CHF pair, which is one of my favorite pairs. Adding this confluence in has helped so much, because if DXY has ran liquidity and it looks like it's going to retrace, that means the other currency pairs are most likely going to run liquidity and look to retrace. It is an amazing confluence that I think you should all add, and just literally ask yourself after you've done step 1 and step 2 in the morning, ask yourself, okay, is this going to be a strong dollar day? Is it going to be a weak dollar day? Practice this, look at this. The correlation is amazing, and this is going to help your trading a lot. Step number 4 to help you become a top 5% trader is you want to determine where the market is going to reach for next. And what I mean by reach for is, have we just taken a lot of liquidity out of the market in the previous sessions? If we did, then the market is going to look for opposing liquidity. So if we had just ran a weak low or an old low, or were rate hovering around one, maybe creating equal lows or whatever, you're going to want to wait for the market to do that. You're going to want to wait for the market to reach for this liquidity and then look to take the market in the opposing direction. So that's one thing. Liquidity is the biggest aspect in the financial markets. It is where the market is constantly reaching for old highs, old lows, you name it, old session highs, old session lows, previous day highs, previous day lows. All those types of liquidity are going to help you dictate your bias for that day. So what I will do is, if I'm on in the morning and the market is around an old low and I want to look for longs, I'm not looking for longs until we take out that old low. Vice versa for shorts. If I'm looking to short the market, I need to see an old high get taken out of the market before I look to get involved, because there will be a liquidity hunt. That is how the market works. And those who know a lot about liquidity know exactly what I'm talking about. And if you don't, do some more research on it. Watch some of my older videos, watch my trade breakdown videos, and I teach that stuff very, very well. Liquidity is one of the biggest concepts that I actually look for on a day-to-day basis. And I'm telling you, once you see liquidity and once you see how the market works based around liquidity, you're never going to unsee it. Another thing you're going to want to ask yourself that is still within step 4 is, are we in an imbalance? Are we reaching for an imbalance? So there's liquidity, then the market is most likely going to reach to rebalance price. If you want to know more about imbalances, look at my older videos as well. Another thing is, are we in a higher time frame point of interest that you've marked out, right? These are all things you need to know. Top-down analysis, asking yourself and analyzing what happened the session before. Then you're going to want to determine strong dollar, weak dollar. Then number 4, you're going to want to ask yourself, where is the market most likely going to reach for? Have we ran old highs? Have we ran old lows? Market is most likely going to reach in the opposing direction, and that is the direction that you want to trade in. Which brings me in to step number 5 on becoming a top 5% trader. You want to trade in the direction that the market is going for. Stop trying to catch tops, stop trying to catch knives. When the market is bullish, trade bullish. When the market is short, wait for shorts. Yes, you can have counter trades. That is fine, but I only recommend that for more experienced traders, because a lot of the time people will just get absolutely slaughtered trying to catch the top, trying to catch the top, trying to catch the top. Just wait for the market structure to show you that it is ready to reverse. And once the market is ready to reverse, then tag along on that new trend. The trend is your friend. I know people agree with that, they don't agree with that, but if you want to increase your strike rate as a trader, wait for the pullback and then look to get involved. Again, you may agree with this, you may not agree with this, but when I was trying to trade counter trend and I wasn't a great trader, I just took loss after loss after loss. And yes, sometimes you're able to catch that amazing trade that you can throw up online, right, where you catch the top, but you know, most people end up taking a bunch of losses just to catch that one. So wait for structure to shift, wait for liquidity to be taken out of the market. Ideally, you want to see liquidity taken out of the market, then a structure shift. Then that is only increasing your probabilities of a reversal happening or a continuation, depending on what the market is doing in that said circumstance. So yeah, guys, that is the top 5 steps to becoming a top 5% trader. I hope you guys enjoyed this type of video, a nice little sit down video. If you guys want to see more on how I trade, click the link and check out the mentorship. Or if you don't want to, just watch the YouTube videos for free. That's entirely up to you as well. Let's continue to grow, guys and girls. We're on the way to 40,000 subscribers, which is absolutely crazy. And I appreciate every single one of you. So what do I say at the end of every single video? Let's be 1% better every single day. I appreciate you all, and I'll see you in the next video. Take care.